Alrighty. Hello, everyone. Welcome to the show. I am here to bring you, well, not physically bring you much of anything, just because internet. But yes, topic of the day would be merger risk arbitrage. And I have quotes on merger because technically, when most people think merger or merger risk arbitrage, they actually just think acquisition. uh, so, a little quote there, but that's just the naming convention that I've seen. Uh, and technically, arbitrage also should have quotes, but it is what it is. Like a true arbitrage would be, say, for example, you notice a commodity or something of like equal uh, equal class or very very comparable. Trading in one exchange and the price is different than the other, so you can purchase it in one exchange, sell it in the other. uh you know Slow in one exchange, higher in the other. That would be a true arbitrage, like a true arbitrage. And people oftentimes misuse the word, where like it's as immediate as possible and there is a clear gap. But in the context of merger risk arbitrage, what are we talking about here, and why should anyone care? Well, the beautiful thing when it comes to any sort of investing, trading, or speculation is the market is so big that people can play and execute, or not play, but they can bring who they are in different ways and have things be relatively valid. What do I mean by that? So, when it comes to any sort of, again, in this case, merger, risk arbitrage, or acquisition, if a person were to be more of a legal mind, have experience with M&A law, have any sort of experience in that, more of a legal field, then that this could be a viable strategy. Maybe you have, if not an edge, at least a better understanding than most. And why the heck am I talking about this? Who the heck am I? Well, I am just a humble student when it comes to trying to learn more and more about accounting. That's why the negative 2A1G is here. My co-host, normal co-host Andrew, would be the one that helps carry the thing as far as validity goes. So, uh, without further ado, here's an example of merger risk arbitrage in action. So, old news, because this one's already done. Like I have no bag to pump. There is no real meaningful victory lap here that I'm going to take because I've dabbled around with this one. Way back when. Microsoft announced their acquisition attempt of Activision Blizzard back in January 18th, 2022. This is just a simple press release. Sometimes your press releases will give you an example or specific details that, like, you really care about. So in this case, Microsoft announced that it would acquire Activision Blizzard for $95 in cash per share, or the amount of, as far as the market cap goes. Now, let's see if there's any sort of validity in that, and how a person would possibly want to play or execute something along that uh, route. And oh darn, I'm not able to share the exact thing. Well, let me just share the window then. This hopefully will work. This might be cursed, but fingers crossed. Shoot, darn it. I don't think I'm able to share the screen share on this. This is cursed. Darn it. Uh, Crap. Well, if we go for trading, if you have like an app like TradingView, and you zero in on January 18th, 2022, we can see that the day, or the trading day before that, being January 14th, 2022, Activision Blizzard originally closed around $65 a share. Around that January 18th marker, Activision Blizzard closed at $82.31 a share. So the market does when it comes to any sort of announcement for an acquisition, it can, the stock price can and will move accordingly. And this is really frustrating. You would think that I would have done better with this because, oh, there we go. Thank God. Good God. There we go. Much better. Yeah. So, trading day before, uh, you know, pretty low. Activision has been hammered. It had its own reputational issues, but then announcement day happens. Stock price jumps. Didn't necessarily get to this to the $95. Yeah, $95 share mark, which generally speaking, and we'll have to put an important pin on this. Generally speaking, when it comes to any sort of M&A, a company will pay a premium, pay more than what the company is already trading for the acquisition. Uh, Again, important note, we'll take a pin in this because later on in this live stream, I will counter myself, and we'll see why. So stock price jumps up closer or maybe around that number, and which case, we would think to ourselves, well, logically speaking, this reflects that Microsoft announced its intentions to buy Activision Blizzard. Uh, Maybe there's something there. Maybe, like, hey, we've underpriced Activision Blizzard because if Microsoft's buying for it in all cash, eventually you, the Activision shareholder, will get that cash. Uh, and as we can see, generally speaking, over time, share prices tend to go down. Maybe that is where you can, as a possible person on the sidelines, can exit. And as the share price drifts down more and more away from that close price, that price that the acquiring company is willing to cough up for it, you would think to yourself, okay, maybe the market knows something that I don't. Maybe there's regulatory risk, regulatory approvals that need to happen, or there's a time delay that the extension will need to be filed for the deadline, et cetera, et cetera. And we can see before it finally closed, and it ended up closing right around here. Trading Views data just stopped there, but I imagine people got their $95 because the deal, spoiler alert, ultimately closed. Uh, you know, Certainly you've had a wild ride all throughout, and hopefully everybody can see that and everybody's doing all right with that. Any comments here to help me out? No, not at this time. All right, so that's fine. That's fine. I will make do. So that being said, let me then pivot to no, not slides. Let me pivot then to another topic, which would be um, this. So oftentimes when it comes to merger risk arbitrage, I've noticed that people tend to zero in on uh, just the equity, which yes, assuming the deal goes through, you can, in theory, make money. Uh, that being said, though, and this specific deal or method didn't necessarily work, but I will give credit to other people, which would be over in Capital Mindset or Fabio's Discord, being their own thing. There's two people in there that were nice enough to collaborate and share information about this little gem, being Activision Blizzard's senior notes. There are details around any sort of debt that you could potentially go long or short the debt, and it all would revolve around the nature of the debt as well as any sort of rule sets along there. So a historical reference would be one where Aswath Damodaran has referenced a fair amount, being RJR Nabisco, I want to say, where Nabisco originally, the company famous for the Oreo, the cookie, uh, ended up having a fair amount of debt, but it was seen, credit ratings were like, yeah, this company's all right. Company acquires it with leverage. So if you were originally a Nabisco bondholder and then you get your the company that you owe money to ends up being more heavily indebted, credit rating drops, what do you think that happens to your bond price? So there are, like, of course, way back when, that was decades ago. Uh, Nowadays, so many bonds and notes and other debt instruments come with their own sorts of covenants and different structures. So just things to consider. The other thing that anecdotally I try to do is I try to take a look at the bond market, see if there's any sort of liquid bond market, and maybe the bond market will indicate something like, "Hey, we as bondholders are worried that this deal is going to go through. We will actually, like, either raise or lower the price accordingly." Whereas the stock market can, or stock price for whatever company, can go up, down, whatever. Um, and that would actually be a great segue. But before I do that segue, hello. Thank you very much for viewing in. Thank you, viewing public, for swinging in. It means a lot to me. And even if you're not here live, perfectly fine. Uh, oh, shoot. I completely screwed up. I will have to revisit this this segue. Botch the segue. I messed up. Let me hit the banner. Hit the banner. Banner's important. Banner is important because before I do that, an interesting possible tool that's free is Justia. Um, it's not exactly always perfect, but yeah, because anecdotally, before, shoot, of course, I present it and it goes just fine. Before I would type in Activision Blizzard, drop down menu wouldn't even show. But this one is very nice from a U.S. perspective because I haven't tried for international companies. But you hit a U.S. company, click on that, and you'll be able to see different types of details. And if I clicked on M&A, this is what it pulls up, and I click on each one. So this one, spoiler alert, time, matches just in line with the uh the public announcement, the PR release. And we can see some fun details here. For example, parent da, 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 termination fee. There we go. That's what I wanted. Now, what makes some deals very compelling is because even if the deal doesn't go through, maybe there's a termination fee for the company that you're holding. So if you held Activision Blizzard at the time, there were very clear landmarks, or as far as like time goes, where if the deal was broken, and assuming that Activision Blizzard kept things on the level, $2 billion there, or if there was a termination notice around this time frame, 2.5 billion, and any time after there, looking at 3 billion. So, like valuation can be a tricky thing. That being said, though, even if the significant amount of money, assuming there's a significant amount of money coming through, you can use Adjustia, or do your own digging through SEC filings to find the details. But thankfully, though, again, there's aggregators. No aggregators are perfect, but this one not half bad. Funny thing is that once the deal got closer to closing, things get waived, which this letter right here, for the merger, I want to say, yeah, the the termination fee ended up getting waived. So important things to note. And it's not necessarily that you're going to win. And I'm not here to talk about statistical math, because I would screw that up. I'm not prepared for that in this presentation. But from a legal perspective, though, if you're more aware and on top of things, maybe you have a shot, and maybe you can do some sort of statistical overlay with your methodology. Um, and it's the market. There's plenty of ways to make and lose money. Uh, that being said, though, on the debt note, I don't want to highlight just an example of things that worked, because thankfully, recent history has provided us examples of things that don't work. So I would reference Spirit JetBlue, October 19th, 2022. Uh, JetBlue announced that it was attempt to acquire Spirit Airlines, and if we go for and then present there we go, and not Activision. We're gonna go with Spirit Airlines. So October, as we can see, complete and utter crap show. And in many ways rightfully so, especially with hindsight, because this company, October 2022, that let me double check here. Yeah, October 19th, 2022. So we got right here is when the announcement got made. Market was a little bit more hesitant to believe that the deal would go through, and then eventually regulatory news would happen, and share price ultimately dropped. Yes, there's plenty of ways that you, as a speculator, could make money, or as a trader, in between details. But the funny thing is, and I don't have I wasn't able to get the information, so it's a little bit of trust me, bro, on this, but. Uh, the bond market, when it came to JetBlue, was showed signs of, oh no, we're worried that JetBlue is going to be even more indebted and a little bit more ugly and risky. So turns out bond market was wrong. Price can be a fickle thing. It can be a tricky thing, and ultimately, here we are. Two questionable companies, but the funny thing is that we can go to JetBlue, and October. Let me kill that and kill this. We don't need that. Uh, October 2022. Do. Yeah, it's funny because generally speaking, the acquiring company usually goes down in share price because the market automatically assumes, and usually rightfully so, you're overpaying for an acquisition. Um, so maybe there's some sort of pair trade that you could do. But that being said, though, in this example, two airlines can be really really tough industry as far as margins and fundamentals goes. Uh, so if we fast forward here, ultimately, yes, they did file an appeal, just because whenever a lawsuit or a suit happens, there's generally an appeal. Uh, but ultimately, in this case, we had termination. Both companies agreed to, you know, terminate the deal. Funny thing to note, though, is JetBlue would pay $69 million. Nice. Um, for a termination fee. These things happen. Does that mean that Spirit or JetBlue are buys or sells? I leave that entirely up to you. Just wanted to point out that this sort of this sort of methodology doesn't necessarily always work out. Uh, that being said, there is a there is one that is currently happening right now, which would be Capri Holdings. Capri Holdings was going to get acquired by Tapestry, TPR, and guess when the deal was announced. Yeah, because this one was, I want to say it's also all cash. This one I've somewhat had on my radar, because I noticed something out of the blue. An acquisition attempt was filed, uh, and as we can see, market has slowly but surely, said, yeah, we're a little bit more doubtful. It's funny to note though, because everything is so many companies are so international, that it's not just one regulator you need to worry about. It's just about all of them. So, for example, with Activision Blizzard, one of the holdups there was the UK regulators. For JetBlue, it was US regulator. Same thing with Capri Holdings getting acquired by Tapestry, or the attempt there. Uh, because yes, the EU regulators have a say. UK, pick any of the bigger named regulators or meaningful countries or economic areas, and those regulators certainly move the needle, and they certainly do matter. So fun thing to see right here. August 9th to August 10th. Let's go to August 9th, August 10th. Boom. Nice, clean, and you can see you can see as the deal is a little less and less circumspect, or not circumspect, I'm misusing words here, but a little bit more in doubt. We can see what happened to Capri Holdings' share price, whereas Tapestry's has relatively gone up. um, of course, other things matter, such as the fundamentals of the relevant companies in question. uh, but fun to notice. That being said, hi Moxie. Um, I just wanted to take a look and see where the poll is at. 67%. So roughly two-thirds of you so far say no, not a big fan of any sort of M&A activity and playing that. That would imply one-third of you so far say yes. That's fun. It's good to note. Um, so wait, shoot. I didn't share the actual price movement. I'm a dum dum. Well, this is well documented though, but yeah. So Capri Holdings, yeah, share price drifted down to, you know, low mid 30s and then jumps up. So August 9th, August 10th. I forgot what the exact deal price was, but it was pretty much like right around there. And then it slowly drifted down since. Tapestry Holdings, which is, or Tapestry Inc. Yeah, Tapestry Inc. is the one that would acquire them. So same date, August 9th of 2023 to August 10th. We can see the drop. Uh, so that usually tends to be the case as far as, again, I mean, M&A. But remember when I said that we would have to put a pin on something uh, for when it comes to M&A activity? Because generally speaking, if a company announces, "Hey, I'm going to buy you," and they're going to they have a set price. Uh, Generally speaking, you wouldn't think that the price would be above that price, for the company that's getting bought. Well, credit to Fabio of Capital Mindset fame. He showed me this company. It was funny because he presented it in a way of thought experiment. So March 2025, or March 25th of this year, Target Hospitality (THQ) is the acquiring company being Arrow Holdings, is attempting to acquire it for $10.80. So pretty darn simple. Um, so we would think share price would go up to or stop just shy of that mark. But if we look at not this one, but here, so March jump. All right, makes sense. But wait a second, it closed $11.12. Okay, maybe that's a fluke. Maybe that's. Oh wait. No, wait. It's above. It's above, and it's staying above. Does this mean that the market's rigged? Does this mean that that we need to put on our tinfoil hats and worry about some sort of conspiracy? That no, no, no. There is no such conspiracy here. Like, some people would say, what's the difference between noise and signal? And yes, sometimes price can be noise. Sometimes a headline can be just noise. That being said, when price is sustained above an acquisition price, because this is public information. A PR release, that one's public. Anyone can go into SEC Edgar or Justia or wherever the heck, and a simple Google search will produce these results. You can see this. Like, shoot, I found it. I'm pretty sure you all can find it. But if the share price has been elevated beyond this for this long, then that would assume that people either are just being silly traders, which has happened. I've seen an acquisition price be announced, and things tick a hair above for like a brief blip, and then it goes back to normal. Eventually trails off. Um, but in this case, though, I think we can safely say that this is a signal that Target Hospitality Holdings, like enough people think the company that's making the offer to purchase them, being Arrow, they're underbidding, and that they think that the deal will be rejected, and a counteroffer will have to be provided, and it will be at an elevated price. Excuse me. So that's just one of those things where we can talk of in concepts or in generalities, and by and large, yeah, it would make sense. But it's always fun to notice things that it's not enough to just only operate in generalities. Because when I noticed this one kind of hurt my head a little because I noticed the way how this one was presented to me, that there were details and nuance where I was a little unsure of. And yeah, yeah, once I got to the bottom of it and figured out how and why, uh, it's neat because even if you do or don't decide to play around with merger risk arbitrage, perfectly up to you. It is good to be aware of these things and how these things can operate, with or against you. Anecdotally, uh, I have also invested in a company where it the company ended up getting bought out, and the offering deal was one of like the holding companies under some Brookfield umbrella, and the deal was like a fair amount of cash per share, but also you as a shareholder would get the Brookfield asset management, like relevant co shares, and naturally share price jumped up on that news. And after a little bit of thinking, I thought to myself, no, that's not worth it. Let me just get out right away. And maybe in hindsight, that's not a good idea, but in that particular instance, you would have to be comfortable with what you would then be holding, because what you were once holding, maybe that complicates things. Because maybe you want to hold JetBlue and hope that the deal goes through, in which case you'd hopefully just get cash. Uh, maybe you don't trust, uh, or rather Spirit. Maybe you don't trust Spirit as an operator, but you trust JetBlue's cash. So there's what I'm getting at is markets a big enough place where who you are and what you bring to the table can work. It can also work against you. Plenty of ways to make and lose money. So with that being said, let me see if I can close this poll, because I think I got enough here. End poll. And we got 60% saying no, 40% saying yes. I just wonder if that number would, or percentage, if those percentages would change if I, I were to rephrase things to "would you now consider?" Uh, that being said, I want to thank you all for watching, and I appreciate all of you. Please do consider liking, commenting, subscribing, notification bell, all the things, sharing the word of uh, this solo topic. No, this channel that Andrew and I both have running together. Fingers crossed, we get a proper Two Accountants One Gap live stream. Anecdotally, right now, Andrew has been furiously working behind the scenes between work and a company that I've mentioned to him. We've it's funny because having talked about B Riley, having had Fabio and Andrew both talk about this, He's just like zeroed in and locked in on it. So, uh, yeah, yeah, yeah. I apologize to the viewing public that has an attention span that is proper. This topic was supposed to be released earlier, but I just wanted to give proper credit to where it was due, and you know, again, the Activision Blizzard senior notes, that one didn't quite work out, but it's good to look and think of things, not just be zeroed in on one asset class or playing a certain thing with one specific thing. Just because the market is quite huge, so major special thanks again to McBuda T and Lecker Lad. They've asked. They didn't really care as much about credit, but figured that I would, and those names, are relatively anonymized. And of course, to Fabio Capital Mindset for the TH Target Hospitality one. Just fun to see things. Also, in fairness and also full disclosure, since I'm giving out credit everywhere, uh, it wasn't so much that Capri Holdings was on my radar as an M&A play. It's more so that it transitioned to that. Uh, but credit to a certain person named Hayden, who was nice enough to share that idea as a possible investment or speculation from a valuation perspective. So it's nice to be included in these things, and I figured no harm in sharing details to people. So we'll see. We have I presented two deals that are that are still in the works, being Capri Holdings and Target Hospitality, and two recent ones in recent memory that one went through, one did not. So no technical victory laps for me, just simple, relatively simple stuff. Hi Dex. Uh, so with that said, fingers crossed this weekend. I make no promises though with Andrew and his busy schedule. Worst case scenario, I'll try and whip out another live, so that way we at least have one bit of content each week. So with that, this is me signing off. Thank you all for sticking around. Bye.